right, let's jump into it. Start off with DXY this morning. Actually, where are we? 10:34 on the 21st of March. So yeah, into that last third now. Look, I'll start off with DXY, which is been down the back end of, of the analysis a little bit the last sort of couple of weeks of that because, or yeah, week or so, just because it hasn't really been doing much, as you can see here. It's just sort of ranging sideways. Look, I mean, obviously, look, DXY is always going to be important, so it's going to be a bit of a driver. But it really is just, it's come down, it's just, hanging at the lows down here. But now all of a sudden, it's starting to get a little bit interesting because this is the play that I've sort of been calling over the weekend that, we could potentially be seeing a larger range set up down the bottom over here, particularly if they held this little lower end, which they have a number of times, as we can see down here. Look, if we sort of, just to sort of recap this thing, I mean, it's pretty straightforward on the chart there, but if we have a look here and we say this is the range, so this is your little breakout box, this is how we achieve this price target up at 104.70. Look, basically what happened with it overnight, we obviously saw that big rally up and a pushback up here. Sellers came in exactly where we thought they would. You know what I mean? Like again, it's I repeat the same sort of thing, but this is what trading is. It's just it is repeating the same thing, and this is why it's important, in my opinion, only to trade a couple of markets because you get to know the nuances with these sort of things. And as we can see here, look, a lot of the market is sort of thinking this is going to happen. And look, I do believe that this will happen. But as I've said the last couple of days, I'm open to the idea of a USD rally prior to this move happening. I think once this does take out this 103 area, I think yes, we will sort of move down. And I've got 101 as my price target down there. But I'm open to the idea of squeezing some people out first because, like I've sort of said a number of times with these things, particularly with these sell downs as well, if you're going to take it to 101, why sell it from the bottom down here? Why not sort of, come out with some sort of fancy headlines, come out with some sort of things that justify a little bit of a short-term rally on DXY, and then sort of sell it down from a higher level because obviously the profit in this move is a lot better than the profit in this move. I mean, that's straightforward. So we have sort of seen this thing rally up. Sellers have stepped in as we sort of thought they would do. It's closed relatively, I mean, this is on a 1 hour. It's closed relatively sort of bullish towards the top end of that candle. Let's have a look on the daily. So it does look like it's trying to sort of move up here. If you look at the daily, it's sort of like, I'm sure there is, I haven't actually done this, but it's always been in the back of my mind that there could be some sort of equation for how long things may consolidate at a bottom before either falling down or rallying back up, proportionate to the drop down over here. So maybe I'll look more into that kind of thing because I'm sure there must be some sort of way because a lot of people think, I mean, V-shaped recoveries happen, but they're very, very rare. And generally, as you can see, if you get any sort of sharp move up, it just comes with another big push down. So the fact that we're going sideways, obviously, it's consolidating the lows. So anytime it rallies up, sellers bang, push it in. Rally up, sellers boop, step in. But one thing I've known about DXY and trading, and this has been a costly kind of a lesson, I have to admit, is that when DXY looks like, okay, it's rallying, okay, it's going to fall over, that's the time that the USD fanboys step in and they jam it up higher. So good example of this was back when we had this rally last year. So this is the one where we had the 50 base point cut. And as you can see, little range here, came down, 50 base point cut, came up here, looks rolling over, bang, goes up higher. Looks like it's dribbling down, bang, moves up higher and coming down. And like it did this time and time again. And if you sort of were trying to sort of like find some sort of levels through here, this thing was just sort of rolling over and breaking this level each time and still pushing up higher. I mean, even at this point here, nice little horizontal below, one last fake, as we know DXY likes to do. This one sort of is a perfect example because this is very much how DXY tops. It goes boom, 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 drops down, one last hurrah, drops down. Of course, this was election time, so this is the difference with this light here. But the point is that when this thing starts to rally and it looks like, okay, it's going to roll over, it jams up a little bit higher. So there's no prizes for being the first one into the trade, particularly if we do find that this thing starts to move up. So if we sort of take out these highs, if we get out of what is this sort of range here, yes, the price target's 104.75, but based on the depth of the range there, but it doesn't mean that it has to stop there. Though I do think this is merely just going to be a squeeze before getting sold back down. But, 104.75, that's a measured move price target. Not everybody's trading that. I'm trading that. But, what we could also see is a rally right up until 105.58. Retest this big support zone through here. So, look, there is a couple of things sort of showing that maybe we are going to see this continue through. So we'll see how this session, I think this session will be very telling. Because of course, this is top end of this little range here. Let's drag this on here. I don't like making it any fatter than it needs to be. Well, this is the top end of the range. We know that the sellers are here. So, this is the significant level to watch right now, because if we break through here, yes, we got another little level just up over here, not as significant, but will pose some sort of reaction, and we will see some sort of like sell down attempt from sellers from the market, but then we're sort of moving up towards the price. So I don't think if you break through this level here, because it's been 1, 2, 3, 4, 5, like whatever, a bunch of times it's been hitting down the bottom, sort of hitting up against this thing, and then you break through it, I don't think this is going to be significant enough to then cap it to sort of come back down. So it's important to sort of see that if this gets a move and this starts to rally along here, we could see some continuous sort of USD rally moving up over here. I mean, the flip side of this is that, look, sellers here. Every time the sellers have come in these times, it's pushed it all the way back down. But I think you need to honor the idea that this thing did actually rally up to this level, did clip into those into that sort of resistance level. That means buyers are there, buyers there. Yes, they're meeting sellers, but it's not through lack of buyers. Well, I mean, kind of it's through lack of buyers, but it's not through lack of buyers to get up to this level. It's just that the sellers or people that maybe were trying to sort of short it or something like this, whatever, that side of the market have stepped in and capped it at that level. So the reason I sort of say this is because it's very significant. I'll cover this with Aussie in a moment, because that's what led to Aussie's big, well, part of what led to Aussie's big sort of sell down yesterday was that failure to keep that momentum going. And with a lower high equaled into a push back down. We could see it, I'll get to Aussie and explain this in a moment, but this sort of move through here, had this move fizzled out lower, it means that the sellers are then progressing down. It's not, it's just you deplete the sellers, okay, the buyers retreat. Deplete the sellers, buyers retreat. This one here could have been something that could have led to that sort of breakdown over here. But as you can see, buyers have stepped up their little move from down here, albeit small. They've stepped up and they've driven it up and they've taken it into that level again. So as long as buyers keep hitting this level, there's a chance that we break through and it pushes up higher. It's the times when it sort of fizzles out a little bit earlier, that's lack of buyers moving up. It's also a combination with sellers going, look, you know what, I want to sell it. It's going down to 101. I'm not getting it at this price because the buyers aren't there to take it up there. Look, I'll just take this lower level here. And they push it down. So I think the fact that it smacked into this, albeit sort of got rejected, that's fine. I think that's a telltale sign that this is going to be moving a little bit higher and we're going to be targeting that 104.75 with the idea that this could overshoot and come up to 105.45. You got to think, look, gold's at massive all-time highs. It's sort of really starting to sort of consolidate at its highs at the moment. Should we start to see some of the profit come off that? We could see, a couple of things happen. We could see the euro sort of pull back a little bit more. We could see, equities, I think, are set for another little push down as well. If all these markets start to pull back, US dollar's looking very attractive because remember, it's 4% cheaper than it was just 2 weeks ago. It's, I think, sort of definitely a place where we could see a flow of capital moving into there. So for me, a close above 104 is going to be very significant. Put an alert on it. Of course, always with the little asterisks, we could be coming back and it comes down here, but boom. Look, I am of the camp that it's going to go to 101. I do believe it is. But as I said, I think given everything here, I think there's a chance that we can move up higher before we move back down. All right, let's move along. So we got gold. As I say, gold sort of yeah. This is what we were looking at yesterday. That sort of three drive. You sort of see it on the 1 hour probably a little bit better. But it's starting to move up. Boof, coming to move up. Boof, starting to come down. I'm not a fan of microphone tops or megaphones or whatever the hell they're called. Just like I'm not a fan of diamond tops. I just don't think they work particularly well with the markets that I trade. But what we are sort of seeing here is obviously sort of coming back down and it's respecting this lower support area. To me, this is both sort of saying that sort of like, as you can see here, this was the idea. Break this level here. Yes, it flared back up. That's fine, whatever. But break 40. This is where we were targeting, 26. Clipped it, unable to close down underneath it, and obviously, bang, dribble back up. This is, again, significant level that if we get underneath it, we're probably going to see something come back down a little bit deeper towards sort of 3,000. So it's certainly, look, it's very resilient. I mean, we've been seeing buyers go crazy with all these dips all the way through here. It is really sort of churning a lot here at the moment. I mean, we're putting in higher highs, lower lows. Like this obviously didn't become into lower low, but sort of dribbled up around like this. Not enough to really call this a sort of head and shoulders. I mean, technically, yes, you could say that it probably is. Like if we drag this across here, look, we are seeing sellers sort of vaguely sort of come in here. They were into the end of the session. It's sort of dancing around it a little bit now. Look, again, I just think this is the line. I think if you get underneath sort of 26, a close down under here, look, I think we're going back down to 3,000 would be the initial sort of point, and you sort of say, look, round number, retest. And so, yes, I think you'll get a reaction here, but I think that's too obvious. I think sort of like, people go, okay, yeah, I'm going to wait, I'm going to buy it again at 3,000. You get a bit of a sort of push up. There's a little thing going. I think if we get down under here, 3,000, retest, big breakout, yada yada, round number, all this kind of stuff. People buy it, we get it moving up. I think then they sort of jam it back down. I'm targeting sort of 29.80. I think that's a good sort of double, triple flush kind of thing of these highs up at the top over here. And I think it represents a great sort of risk reward to then sort of move towards. As I said, yes, I think 3,100 is probably your sort of where you're going to sort of see a touch up. 31.10, I think I had the price target. But I am sort of, again, if we see US dollar become a bit of an attractive place to park some capital for a bit, I don't see why we couldn't see a little bit of a pullback, deeper sort of pullback on gold through this period. I mean, look, even if we come back to these 29.80s, strong support areas over here. Let's put this. This is my price target. Bang, coming down over here. That's through like from here. 29.8. I think this is a good sort of little support area. We've seen sort of buyers really sort of hold it here. Oops, another one. Pinpoint here. So, buyers have held it, buyers have held it, buyers have held it. I think the buyers will hold it here again. I just don't think this seems like a significant enough level, apart from the fact that it's a big round number, to sort of really sort of act as a big support kind of thing. I don't think, we're in some meltdown mode, or anything like that. I mean, we are within, what, $10 of all-time highs. So it could just be on with the show, bang, up over here. But, this 3 drive did sort of play out quite well yesterday. 56 down to 26. So, we got a sort of, that's pretty much a 1% move almost, given the fact that we're at 3,000 now. A $30 move is 1%. And this is the thing I was saying, actually, in a message to a mate. It's sort of like, you've got to get used to the fact that gold's at these highs because, in the past and that, 15, $20 moves are like, I mean, look, they're still decent. It's a good, decent return, but they're a lot more common now because it's a lower percentage because you're at a higher level. So it's not like, oh, wow, we got sort of $30 move. You know what I mean? That's 1.5% or 2% or something. Or 1,500 would make it 2%, but you get the point. it's a high. It's something you just got to keep in the back of your mind as well. Anyway, but certainly this is what I'm looking for. I think if we get down underneath 26 or so, I'll be targeting down towards 29.80. I mean, look, realistically, that still comes in around that sort of 38% retracement of just this last leg. So this little move up through here. So this is not even given what we've seen through the whole year. See, what are we looking at through the whole year if we were looking at that? I guess you'd probably take from these lows. There you go. So it's a higher time frame kind of move there. So look, if we look at this in sort of context of what we've seen this year, because this thing has just been unbelievable this year. I mean, this is from December 24th here, which is that last significant pullback. Um, Even if we came back to, the 23%, that's 29.45. And this is what I'm saying in terms of sort of you got to get used to how strong this move has actually been because 29.45, that's $110 off the highs. That's still 23% of just the move we've seen pretty much this year. That's $110. I mean, that's a pretty decent looking little level. That's a 68% of this last move. Sorry, 61% of this last move. Retest the breakout points, and you're back at the 23%. So all of a sudden, this starts to look like a bit of a pretty juicy sort of target, which you could also say may come in around, depending, of course, how quick. It probably won't come down this quickly. But should this sort of come in around this zone over here, 29.55, you've got rising support that we previously was sort of bounced off twice. You've got previous highs. You got 61% pullback. You got 23% of the yearly move. That's starting to look like a pretty decent sort of little level. I mean, it certainly trumps the 29.80 that I'm looking at. But again, you know what I mean. This thing is just in absolute buy mode, and for this moment at the moment, right now, we're very much still up in this top end here. But I think this is defining a nice little line that we can use as a ledge, which could go bang, 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 and we could see some deeper sort of pullback. But I'm going to make that price target 1, but this would be certainly, I think, price target 2 into this little area over here. Where does that give us to? Well, that's not going to happen. This is a 1 hour chart. No, that's definitely not going to happen at that time. But still, these two horizontals and across with this previous high, I still think that's 1, 2, 3 kind of validations for this point. This rising support, we'll see what happens. Unless this thing kind of melts right down in like the next sort of 4 or 5 days, which would be crazy. That rising support probably won't act as too much of a point. But keep it on there for now, as it obviously used as a bit of a leapfrog to sort of get up onto this last little buy mode run up the top over here. Anyway, look, that's sort of forethought sort of stuff with it all. The here and now, look, 26, that's the level to beat. You get underneath that, 29.80, that's the levels that we'll sort of be targeting, which is still quite a sort of a little significant move to the downside. All right, and on with silver. So silver came within a whisker of that price target that we had sort of set up. Do sort of still think there's probably a little bit more to come with this and that. As I said, look, I'm not looking for longs or anything down here. I actually caught the shorts. I've caught the shorts here, caught the shorts here. I'd be looking to maybe have a shot at some longs at 32.70. This previous sort of resistance area, which used as a little bit of a breakout point, sort of when we sort of broke from whatever it was last week. This is a nice little example. It shows the significance of breaking. When you sort of wide hit, wide hit, wide hit, and then bang, 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 eventually pop through, retest, breakout point, and then on its way. 1 second. All right, and back. So Yeah, look, I think this probably could still have a little bit more downside to come. I don't think this is necessarily what you see for a bottom for this to then sort of shoot back up over here. Again, look, we're seeing a bit kind of similar kind of maybe kind of setup in that. Silver's underperforming gold a little bit, but of course, there was that sort of megaphony kind of sort of pattern happening with gold a moment ago. As I said, look, I'm not a big fan of these. It did provide this sort of falling support into pretty much a zone down here. But for me, as I always sort of say, I look for the body fills. On these large moves, that little body fill right there, that's the reason that you sort of take these out. And where's mine a little bit lower? Okay, because I've said this body fill down here. As you can see, it cuts through the price target there, but that 4 hour was the more significant one. Good to know, just for future placements. But look, all in all, I think look, it's playing out well. I can't really see anything that's going to be sort of saying, hey, look, we're about to move up. We do see a pretty constant little line for sellers, maybe moving down here. Should it sort of get a bit of a rally up, I'll probably be trying to sort of sell something off this area here. But we'll sort of see how this goes. As I said, really, I think it's very much back to the point of let's see what DXY does here. I think if we see DXY punch up here, I think we could see metals take a little bit of a bath. And just on that topic, and that we're seeing gold silver ratio really sort of picked right back up from this bottom of the support area up here and on with the this kind of big range that we're playing with here. So look, once you're up into this top half, this again gives you something to think about. We've seen quite significantly it tried, and got smashed back down. If it gets back up in here again, obviously it's not going through first time as we've seen this little section here, but should we see metals come off, this could be the catalyst to sort of get this thing to break to the top side here. Look, I do think, eventually we will be coming down over here, but, just because I think we're going here, it kind of almost sort of leads into the idea that maybe a lot of the other market thinks it's going there. And if everybody's sort of thinking, hey, it's going to be going to these levels, where's the pain trade? The pain trade is to squeeze it the other direction. And that's what we do. We sort of just follow the flows. We're not trying to sort of move the market. We're just trying to sort of see, okay, where is the pain trade? Where are they going to be able to sort of squeeze people the most? And by people generally kind of mean a whole bunch of sort of retail people that are sort of like, yeah, I'm a gold trader now. Gold at the moment is kind of like how Bitcoin was in 2020 or 21 or whenever it was. So many people came out of the woodwork and now I'm a trader now. I'm a trader now. I don't think one of them is still a trader, or even maybe they're hodlers or whatever they are. But anyway, whatever. The point is, look, this is come back up to the top side of this range here. So on with the range. While you're up in this top side here, you need to consider the idea that we could potentially sort of be going out the top here. So look, any sort of push down here, I imagine this to come back into play as a bit of a support now. So you've got to sort of see this because this is obviously, look, they tried to hold it as a resistance, broke through, pulled back over here. Any pushback down into here, I imagine is just going to get bought up. And this is really your crucial area now because this puts 92, 92.50 on the breakout levels. This is shaped up to be quite a consolidation. I mean, this is taking us back to December, that it's just been in this range here, which is, oops, more or less 5%. I mean, it's a decent chunk move, but still just to consolidate in a range for all these months after. Look at this chop that we've been seeing. You just look at these things in context. Bang, 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 selling down, chop, 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 and it's just really hanging up the top end over here because you could sort of see this as some sort of ascending triangle. Hence the reason I thought we might get a little bit of a touch up down here for either potentially break down or then launch pad up over here. But should this thing just consolidate and break out the top side over here, you could be looking up 95, 96. And if you think sort of what's going to be happening to the gold market and the silver market, should this thing break out to the top side over here, well, most likely we're going to see some pretty drastic sort of sell downs. All right, and onto Aussie. Aussie, this is, again, look, sometimes I trade these things well, sometimes I trade them poorly, but this is one thing that I absolutely nailed yesterday. This was I was playing the short side. I've been playing the short side since we came up into the 90s. So where was the 90s? Up over here, the second point. I sort of took a little bit here, came back up here, and then sort of added it back on, and then sort of caught it and in and out sort of the way through here. So yesterday we were sort of looking at coming into this little resistance zone. I said this is the area that I want to sort of see. And obviously, we had a couple of things happen with this. One, we had incredibly weak. Um, well, yeah, look, it's actually a bit of a mixed bag, the data that we had out, because I say incredibly weak because, of course, that was, let's refresh these here, that was a massive miss for employment. Like, I mean, apart from the fact this got revised down, they were expecting 30, instead of their typical sort of 20, and came in at negative 52. That's that is weak. Then that's a very sort of drastic number. It's not just a miss. It's not just okay, it came out the other side. Like it just got absolutely pulverized. But it's a mixed bag because unemployment still at 4.1%. So you know what I mean. It's not more people like applying for unemployment. It's just that you're not adding the jobs. So these sort of things are kind of like okay. Well, this is actually still quite is a very strong number, the 4.1%, but this kind of miss over here is very much a tick in the camp of, well, are they going to, is it the time to squeeze businesses? Because businesses are the ones that are employing the people, of course, so if people are finding jobs, yes, you got to, I get that, you got to have the two parts to it all, but the businesses are the ones that are employing people, and if you've got a big miss like this, is this the time to squeeze those businesses even more? Um, and by a squeeze even more, you play that out. What does that mean? That means hold rates higher for longer. So is it more in the camp of you may get another sort of not necessarily that you're going for another cut because I don't think we're getting another cut anytime soon, but it is in that camp and that's how the market reacts to it, and that's why we saw quite a drastic sort of sell down. So that played out very well. Let's get back onto the chart. Very well with that sort of sell down. That was when we were coming into this resistance zone here. As you can see, it respected the chart very well. So we were thinking, okay, this is the targets that we're looking for. Turn the alarm off. These are the targets we're looking for. Obviously, these are price levels, not time levels, but this came in exactly on point where we kind of thought it would be. It's an area where we saw resistance, resistance, resistance. Bang, they held it, and they held it for a support. Came up here, respected this area as well, unable to close above this, and look at the reaction. Bang, moving back down over here, and absolutely got demolished. So with this trade, analysis was on, execution was good, management wasn't the best because I took out I took profit. Of the last lots around, they sort of like low 63, 63, 10, 63, 15 in this kind of area just here. So there was obviously another 40 points or so that this sort of melted down another bit, sort of coming through here, which I didn't sort of take anything. I stayed out of the trade altogether. At this point around here, I was thinking, okay, maybe we give it a bit of a shot. I mean, we can see, again, this is why you keep these charts out there, because we know this is a significant level. Overshot it a little bit, yes, came down to these other levels where we're seeing markets sort of move a little bit previously. But the point is, this is a buy zone, and we see market push up over here. The question is that a bottom? No, I don't think it is. I don't think that's the sort of thing that you see and go, particularly after such a big sell down, you don't see this thing V-shaped right back up here. There's been no dramatic data or, what I mean, significant sort of changes with anything to warrant this to go straight back up over here. So this is more just profit taking, bang, bounces back up. I think the risk is definitely more for the downside to sort of target this little area over here, the 62.80s level, and then potentially you could see this thing sort of come down and really sort of bleed down a little bit more. But what we're sort of looking at yesterday was this sort of move up through here, and this is what I was saying. It needed this move to continue back up, to continue that momentum. And what I was saying earlier with DXY was the opposite of this. You've got the sellers here that pushed it down, pushed it down. It's come up here. It didn't quite make it back up to these highs over here. The buyers just weren't there to drive it back up, to get back up into this level. But the point is, with this little structure, and this is what I highlighted yesterday, is You had one move here to break out. You find resistance. You come back here, you find support, support at previous resistance level. This is the leg that we were in yesterday. And this is what I cover every single day. This is the important leg. These two you can trade because it's just breakout, go, it's coming back, you pick your level, whatever. This is the significant one because this is the one that's going to give you higher high, continuation, going to give you a double top, or maybe a range, or it could be a top, or it's going to give you a lower high. It shows lower high. So now you've got high, pullback, lower high, changes this trend. You target the lows to this level here, and now we're flipped. Now we're going down this way. So now we go down and see how the the flow was going up, but now the flow is coming down. And the flow sort of coming back down here means that we find support. Potentially we move up. Whoops. Potentially we move back up. We find resistance where we found support previously. And then we target this leg. And this is the third leg in this move. Now this is the one that's going to give us double bottom, continuation, higher low, and then potentially you could be moving up like this. Or this moves down and the whole thing sort of resets again and you're moving down with a flow down here. So look, that move yesterday was very well played out. Look, there was a couple of things. Obviously, US dollar finding some bids and buys sort of really helped push those things along. We saw, I'll get to China in 2 seconds with the yuan, because that was another one that sort of very much sort of like helped sort of squeeze Aussie out from its positions. But look, for now, I could see this thing probably consolidating the lows. Maybe a failed attempt to break lower, a little rally up to 32.25s. I think if you get up to this level, this is probably a short entry as a retest over here. I think it's going to take a lot, like, as I said, it's a bigger structure that's failed. It's not a low time frame move. It's a bigger structure that's failed. We're looking at potentially a US dollar squeeze. I think this is giving potential for Aussie to really sort of maybe come down towards, test the 62s, which is fine. I mean, look, I'd love to buy some Aussie down at 62 because I do think DXY is going to 101. So I do think Aussie's going to move to sort of towards 65, and I'd much rather buy Aussie down here to move back up. So it means it's just got some downside to come. So from this kind of levels over here. So I think that, look, there's definitely reason to sort of think that, Aussie could sort of rally at some point, but I just don't think it's today. So, if we see any sort of little move up around this sort of level over here, so 63.20s, I'll probably be looking to sort of sell into that move to target, first of all, 62.80s. And then if we can get under that, move back down, break those levels, and maybe sort of around that sort of low 62s, and then sort of maybe look to have some longs from down here. All right, so there's Aussie, and this was USD 1, which we saw play out beautifully. Look, as I said, there was the two options. One was it's going to dribble and fall off the bottom down here. The second was the idea that this thing could squeeze up here and then come down here first. We obviously got the squeeze and it's moved up. It's very similar to DXY in its own way, that it moved up and it found sellers where we thought it would. Now everybody's like, oh, well, we've done that, cool. Let's get on with the show and let's move down here now. I don't think that's the case. I think we're going to see this thing move up. Whoops, I don't like to make these things fatter. I think this has got the idea that we're going to move back up over here. I think this has got to move to 727 to come to really just sort of like screw people out of their positions, take out the highs, take out the highs. I think this is an area where, this is in a sort of, these are more sort of like, okay, let's move down, put my stop here, move down, put my stop here, move down, put my stop here, cut it out, cut it out, cut it out. This isn't really maybe necessarily a level where you're like, oh, let's put our stops over here. Maybe. But yeah, I think realistically 727 is a level that we could sort of see. Whoops, I can't redo those, can you? So let's do this. China squeeze coming. Boom, that's right. That's why we had an alert there. Didn't actually sort of quite trigger it yet. But I think this is the move. and then sort of move back down there. So I think there's a little bit of that. And this goes in line with Aussie selling down a little bit more. Metal sort of coming off a little bit more. DXY squeezing a little bit more. See, they're all moving together, and it's this cross chart confluence that we really sort of look for. All right, and finally, just finish off with copper because this thing is an absolute beast. Look, I'm not trading against this. I'm really just sort of watching it in awe at the moment. Like I trade copper a little bit. It's not my main sort of market by any means. I mean, we have sort of DXY. Sorry, DXY. What am I saying? I have sort of Aussie gold and silver. They're my main traders, and then sort of like WAN and DXY mainly just for sort of getting an idea of the flow of stuff, what's happening. And then copper is a sort of maybe kind of what I call a secondary market for myself and that. And certainly this thing has been great and it trades very well. It is in absolute beast mode. But these are the things. When things are in beast mode, they still have the chance to sort of roll over and, see some profits. We're coming up towards all-time highs. I mean, very close to this little test of it right here. A little bit of a sort of shake early, bounce back up. I think this has the ability to sort of come back down here. Look, if I could get back down here, 488. If I could see some buys from down here, that's the trade I'd like to take. That's where I'd like to be sitting. I'm not going to be buying this thing. I've said this a couple of times and I've missed the last little boats of it all, but that's the name of the game. It's it's better to do that than to sort of um bang, there we go. This is where I'd like to be buying it. Back down at 488. Not at the top up here, but just kissing up at all-time highs with a potential little lower high coming in and rolling over. So I think I'll just be holding fire for this for a little bit, but this thing has been an absolute beast. And if we sort of, I don't do Elliott wave stuff, but in theory, I guess this would be, wave one, wave two, wave three, wave four, wave five. So doesn't that give you like a B, C correction or something like this? I don't know. I'm not an Elliott wave person, but to my understanding, that's the sort of structure that you look for with it. And these are just random levels that I've picked through here. But then this then becomes wave one. This becomes wave two, and then you're looking for wave three, which could be significant breakouts. That's the sort of structure of Elliott wave, as I understand it. All right, cool. So I think that's pretty much it in terms of charts and that this morning. What have we got news-wise? I think we're pretty quiet to sort of finish the week out, actually, to tell you the truth. Yeah, it's not really anything sort of coming up here, and nothing even sort of like no late US data. So maybe a little bit of an earlier close this week. Let's see. That's generally the time that we see things explode off. But no, I think look honestly, I think it would just go to sort of wind out a little bit of the week. We're seeing DXY find a little bit of early sort of buying. So those alerts are set, those alerts go, then we could see those fanboys kick into gear. All right, that's it from me.